I hope you all are having an amazing weekend. In this video, I'm going to be teaching you all how I day trade a bear flag and how to draw this out, how to time your entries, where you would exit this trade. But before I get started, go ahead and subscribe to my channel, click that thumbs up button, and click the bell icon so you don't miss out on any of my upcoming videos. Let's get right into this. First off, we're looking at QQQ on a 15-minute chart. I don't usually watch a 15-minute chart, but you can really see this bear flag really clearly here. And you can see on the 5-minute as well. If you want to check this out, it is on Friday when this flag was, when I noticed this flag. Anyways, let's go ahead and draw this out. I will be using this tool here on Thinkorswim. If you're not familiar with Thinkorswim or need some help with it, reach out to me. I know all about it. This is what I use every day. So let's just go ahead and draw our flag. We just draw like that. Clear flag. The pole. Okay. Now you can see our bear flag, right? Very clearly, that's a bear flag. Now, one way to get a price target, you duplicate the flag pole. It's just the opposite of bull flags. You just place it at the top instead of the bottom of the trend to get your price target. So there we have that. Now we're going to use this tool here to give us our price target at the bottom of this pole. As you can see here, it actually respected it a little bit there on the 15-minute. I'm sure the 5-minute respected it a lot more. Now, you see how I drew that out, how I found my final price target. Keep in mind, I'll be trimming my position on the way down. I'm not going to wait till all the way down here to take some profits. I'm going to start locking in profits around that 10%, 10 to 15% area. Adjust my stop loss as we go, so I'm not giving any profits back. Risk Management 101. Now, let me tell you all where I would enter this trade and how I would handle this trade. We can go to the 5-minute now. Let's check it out. Let me find it. Here we are. As you can see the bear flag here as well. So now that we're looking at this, a good entry on this is not your typical bear flag, because a lot of times what I notice on these bear flags, they usually have a move down and they get away from this 9 EMA. This is not, we're not too far away from it, and we actually get above it here, but you can clearly see that we're consolidating back. So preferably I get an entry off the 9 EMA right in this area, right before it pushes off. That's what I call an early entry. I get this on a bull flag often, and it works on bear flags as well when you find the appropriate setup. But let's say we did get in here. My exit for this trade, if it failed, would be when it broke out of this trend line. That's how I would personally handle it. You may wait on a 1-minute candle to open above that, or however whatever's in your trading plan. Be sure to follow your stop loss regardless of what I say. I get a little bit of early entry because it tends to give me a better return for my money. By the time we break out of these, I'm usually in profit already, and I get that nice move down. I usually can trim right off that first candle that breaks out, then adjust my stop loss. And typically on a good bear flag break, you don't enter back into this, right? As you can see here, had a nice move down, kind of consolidated back, pushed off the 9 EMA there, continued on down, stayed below it here on the 5-minute. I would be watching the 1 and 5-minute while in this trade, and I would probably get out of it if I seen a couple candles open above the 9 EMA on the 1-minute. Me personally, I say that I probably wouldn't be in it that long, because honestly, if I got in this area here, as you already know, a $2 move on options is a huge move, especially on something like this. They have really good spreads. Well, they have decent spreads. Some days are better than others. Some strike prices are better than others. When I'm trading options, I always get within $1 to $2 at the money. So right out of the money. I don't like to go too far out of the money because, your delta goes down. You're not going to get the best return for your money. And when you're scalping, it's really important that you have a decent delta so you get a good return with a smaller move. If you're not familiar with options and how they work, I got a complete video. You can check that out. It was taught live. It's over 40 minutes long. Got some really, really good feedback on that. So be sure to check that out. But yeah, if you missed your entry here, like I would take, feel free to take it as you break out of this flag here. That's a good entry as well. Nothing wrong with waiting to enter here and just play that move down. Your final price target. Let me show you something else I've seen. A lot of weakness in QQQ, right? What do you notice here? Another flag forming. I had multiple bear flags form on this. When you have these big move down or up, that's how flags form. If we had a big move up, you'd have a flag pole form to the upside, and consolidate back to the 9 EMA would be the flag pattern. It's just the opposite on these bear flags. You get a big move down, which forms your pole. Then you have that consolidation back Usually it's a 9 EMA. In this case, the 20 SMA, which is that green indicator, it respected it here. Then you have a push off, you continue down. But that pretty much sums up how I trade these type of patterns. If you have any questions about this, feel free to reach out to me through the DMs. You can go to my Instagram, probably be the best place to reach me, honestly, or in the comments here. But yeah, I appreciate you all for watching, and I'll see you next time.